So this is going to be the second time we're doing the cup with handle base patterns. The first one didn't record quite right, so we've got a second shot at it here. And with this one, I pulled up some more historical models. I went through some of my old notes from IBD and the different workshops and things like that. And one of the ones that I wanted to bring up here was Baidu from 2007. And let's bring this up here. And so this is the chart, right? And so you're already getting a little bit. Let's put that over here. Got a little bit of a preview, but this is the chart that was that they highlighted as a cup with handle. And so I thought that this one was pretty interesting as a case study. And one of the reasons why I thought it was interesting as a case study is because there's some flaws in the space. Right? If one of the flaws in the space, the major flaw, is that the bulk of it is formed below the 50-day moving average. Right? Most of the time when we're looking for a cup with handle or really any kind of base, we want it to be above the 50-day. And a big part of the reason why we want it to be above the 50-day moving average, it has to do with it being in a stage 2 uptrend and showing that this is a stock that's already made a move and it's just consolidating within an uptrend and it's ready to continue. Every now and again, that's not the case. And you'll get a base that looks like the one that Baidu made here back in April of 2007, where price was hanging out below the 50-day moving average for a good period of time over here. And then what happened over here, right? This was earnings, and price gapped up, pretty large. This gap up was it closed the day up about 14%. At one point, it was up about 20% on the day. And so I think that part of the point of this is that when you get a huge gap up like this, it can nullify some of the negative aspects of the base, some of the flaws that were in the base previously. So all this hanging out below the 50-day moving average and that being a flaw, the character changes starkly here. We're not necessarily buying it on this day, right? We want to give it some time to consolidate, especially since it's coming straight off the bottom here and it had such a huge move. We want to give it some time to consolidate, allow the other moving averages to catch up. But this is a game changer here, where it gaps up like that, and so we want to pay attention. This one, it formed a handle, and it started to break out about 2 weeks later. Right, so the gap up was on April 27th. The initial breakout above the high of the gap, and also the breakout from the handle that triggered over here on May 14th. And so you follow price along over here. And I had this note is actually from the weekly chart that price was up 5 weeks in a row. We'll take a look at the weekly chart in a second. For right now, why don't I just come over to here and put that note just on the weekly. But well, with this, you see the price broke out, and then what happened? Price squats. Right, it squats, and then it kind of drifts up a little bit higher, and then it gets over here, and then it squats again, and then it pulls back even further. And I was thinking, wow, if I was in this stock, I probably would have been shaken out a long time ago. If I were trading this, I probably would have attempted to get in on this advanced entry here, right? I don't know if you catch this, Alberto. You're here with us live, so you tell me if you would be trading this move here on this little breakout from a descending trend line.
Yeah, declining trend line. Yeah,
Yeah, you could have
looks doable. I certainly won't commit much to it. Like a small position, it's feasible, but yeah, it's a handle which doesn't quite look like the typical handle, does it?
Not quite, not quite. So, well, with this handle, uh, price is drifting sideways, so there's that part of it, and you also have the volume declining, which is part of it as well. So, so that's what you want to see in a handle. Is it a typical handle? Um, well, when I'm looking at a handle, I generally like to see something like this, where it almost looks like a pullback buy, and this one is a pullback buy, and we'll talk about that in a moment. But handles can come in varieties of shapes and sizes. But as far as this handle goes, it behaves exactly how you might expect, where as far as price going sideways, volume declining, and then when price attempts to break out, volume is elevated. Right? It's about twice the daily average.
I mean, it looks like a cup with handle in hindsight, because if you were to go back to those dates, it almost looks like it's building a flat base, and like another base, but like a flat base. That's what it looks like to
Ah,
me. If you were to cover things up, you know what I mean? In hindsight,
yeah.
yes.
Yeah, absolutely. And so, in just a little bit, we're going to take a look at Lowe's. And the Lowe's chart, I think, goes back to 1980s. And so we're going way back now. And yeah, you could start to see too, like how patterns now are the same kind of patterns back then, where things aren't clean. Sometimes you get a pattern within a pattern.
Hmm.
So this breaks out, and then what's it do? It meanders sideways, and then it does this over here, and it's doing both of those days here outside negative outside reversal, negative outside reversal, or not, or just a bad close on this day, pick up in volume. If I'm trading this, I'm probably long gone. If I held through this, I'm probably out by this, and I'm not giving it to. Oh well, it's still above the 21 period moving average. It did hold the 21 period, and if you got in over, let's say you got in over here, and you set your stop. Where would you need to set your stop if you're an O'Neill trader at 7 to 8%? It didn't trigger your maximum stop loss, but that's a lot to hold through, right? At least
What's
for me.
what's 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 that? See that candle that pops out of the trend line, which has been drawn, the horizontal trend line. That first day it breaks out. What's the gap to the low of the previous session?
From the
The
gap to the
previous
low.
session, the low of the
So
previous candle,
so for between there
and that
and this
breakout
low,
line. No, and the breakout line above it.
not much. 7%, 0.7, about maybe
No,
zero
no, no,
point
no,
0.8.
no, no. The trend line which has been drawn above that dotted trend line, exactly to
This
there.
one here.
No, the horizontal one, the red
Where?
one, the red dash,
So the red dash. And
which
let's
is a
let me bring it.
traditional. I imagine that's a traditional entry point.
Yeah, that's the traditional entry point.
So from there to the low of the previous day, how much would that be? Five, six?
Let's see. So from here to that day, that's 5.5.
Okay, that's doable.
Yeah. Right. So that was actually like as far as looking at, okay, if I'm entering here and I want to get out with a fairly tight stop somewhere below here, uh, yeah, I would take it at 5%. But if you were getting in uh, at this level and you wanted to have your stop below, say, the low or 7%, yeah,
Mhm.
7% would give you this area down here.
Okay.
And it doesn't stop you out of that, but uh, from my own perspective, this is hairy to sit through.
Well, those two big down candles would really test your nerves because I mean they're closing almost at the low of the day and almost the low of the day. I mean that's what you say. It's hairy.
Right. And for me, I'm kind of impatient, well, when it comes to holding through stuff like that. If it's doing
Mm.
something like that and I'm already sitting at a 10% gain, a 5% gain, maybe I'm sitting through it. But if I'm gonna sit through there and I'm underwater, I don't really like being underwater 2 weeks into the trade.
Yeah, exactly. And at
But
the end of the day, though, after those two candles, you'd be thinking, right, I'm a week and a half, almost 2 weeks in, and I'm virtually made no money here. So yeah,
right.
fold your cards and move on.
Precisely. But this is one of those things too, where a lot of people will. There's plenty of position traders out there. I often say that it's important to know yourself, know the type of style and the type of trader that you want to be. And so some people are perfectly okay sitting through that because their intent isn't to swing trade this. Their intention is to hold it for several months, if not
Mhm.
longer.
Yeah.
So anyhow, the I'm probably out there, but then a point that I saw on this, and I think it's worth noting that later on you get a classic pullback, and I was
Uh-huh.
looking at this. Let me get rid of that. Uh,
And in fact, it retests the pivot again.
yeah, it's
Well,
coming back
almost,
in. Yeah, it's
almost.
coming back in. It tests that general area. You're right about
Yeah,
that. It does test that general area. But now the 21 period exponential moving average is caught up. And it
yeah,
has this positive reversal over here. And something else that happened on that day, too, is that it triggered one of Stu's indicators, that diamond indicator, where you get that reversal closing near the top of its range near the 21 period. And that's something that he looks for and likes to see. Not an entry just by itself, but a couple of days later, and now you're consolidating for 1, 2, 3, 4, 5, 6, 7, and now you have this really tight area to get in, right? That's less than 4% between entering above this high and exiting below that low. So that real tight range, tight price action, low volume gives you another way in, and this one ends up working quite nicely.
personally, I would have taken the high of that the previous 3 4 days. That high. No, next one. No, no, no. That high 2 days before that.
This,
The no back, back, go back, go back, go back, go back, back there. That one. No,
yeah,
the next one. The next one. The high. That high candle there. The next one. That one. I would have taken that as the pivot for the next one. For the next
really,
trade.
okay. And
Yeah.
so you probably would have been shaken out of this then.
Oh yeah. I would probably would have been shaken out prior to that anyway. So like you, I mean, those two down candles would have really tested my metal. It really would.
Ah, interesting. Why would you be buying here?
Why would I be well, I wouldn't be buying on that candle. I'd be buying on the breakout of that level. So as it goes up a week and a half later, as it breaks through that level.
Ah, so you're not buying on this day,
No,
you're buying over
no,
here.
exactly.
Got it, got it. Okay.
And look at the volume profile. That's changed completely in about a week and a half.
Well, in that case, and where would you put your stop on that? Would you have it down
Well,
here where I have it?
around the 21, yes.
All right, so in that case, you would need to risk 8% roughly between your entry point and the stop.
Yeah.
Well, which if you're following O'Neill's rules, that's still within the acceptable boundary.
I would have placed where you are right now, I would have placed it 2 days later as it broke out of that pivot, of the new pivot. I would have, what I would call the new pivot,
Mm.
and put my stop at the 21.
Okay.
But the volume profile is what's really interesting here, because it's changing. So all of a sudden it's changing. In about a week, that volume is slowly ramping up.
Yeah, and that's what'll happen too. And it's what we want to see. When price starts to come in, we want to see volume drying up, and then when price turns back around, we want to see volume coming back in. Especially when this whole pattern started back here, right? Like this was the first big change in character.
Yeah.
And so whenever we're buying, we always want to look to the left and see what happened back here, because that's going to tell us a story.
Sure.
Let's take a look at Lowe's. Time flies when you're having fun. We're almost at the end. All right, so this, we've got to go way back to 1982. Sometimes it's fun looking through these old model books. Just dug it out of the drawer. I went back too far in time.
Yeah, it is actually.
Now let's see here. The charts. Am I gonna have to do this again? Might have to do this again, where the price just kind of flows with where you are, and then I'll be able to.
Why don't you go on a monthly time frame? Maybe it's quicker.
Because we want to analyze the daily.
Okay.
But there it is, and now we've got to zoom in a bit because this thing is split so many times. Like they're not trading it as a 17-cent penny stock. They're trading it when it was like at $30-$40. But because it's split so many times, back here this is the split adjusted. The split price 17 cents. So this is what I wanted to share with you that we mentioned earlier, how sometimes you could have a base that morphs into something else, right? So you have a few things going on here. The base finder, that pattern rec that Brandon Shapiro built, that's finding a flat base and another flat base. The IBD has it as, here's one big cup with handle, and then you had a little cup with handle in here. And this is actually a cup with a high handle because the handle is higher than the original pivot from back here.
But isn't that too deep for a cup? The main cup?
Well, let's see.
It looks very deep.
This is 40% deep. According to their rules, they say that if you're coming out of like a bad bear market or something like that, that sometimes you'll find much deeper cups. So they'll go as deep as like 50% at times. Is it ideal? No, but taking market context.
And the length? That's what?
The length, let's see. So this started in June of 81, and by the time you're breaking out, it's August of 82.
Oof. Wow.
Yeah, so a pretty long base. But then you have this one here,
Hmm.
and so that'll has the proper depth. That's only about 11% deep, 11-12%.
So a bit of artistic license, right?
A little bit. And so they were saying that you would look to enter on this breakout here.
Right.
And so I actually think that that's where I would look to enter it as well. If I and that this actually is a great reminder for me, because sometimes I would see something like this and say, "Oh no, I don't want to touch this because I would rather buy down here and prices going up." But this is not really the proper time to be entering, right? This is a very different kind of pullback versus the one that we saw in Baidu. The difference with this one is that now you have all three moving averages all curved down and prices kind of more aggressively heading to the downside. Price pops out of here, and because you were so you had such a strong move to the downside already, that there's that weight. So price needs to prove itself. It finally does prove itself when it starts to break out over here.
I wonder what triggered that huge spike in volume.
But that volume came a day later. So if you're looking at the breakout here, the volume is above average, but it's not that much above average.
Yeah. It certainly wasn't earnings, clearly, but something triggered that. That's a huge move. And there's a change in the volume profile over the following weeks.
Right.
Because look to the left, and there's like virtually no volume in comparison.
Yeah,
And then
something big
suddenly
happened.
something big happened there.
Something else that struck me on this one as well was that not just the tightness, but that this has been a historically slow mover. And so something that I'm making mental notes to myself as we go. So hopefully these mental notes benefit someone, either you that's here live or somebody that's watching this later on. Is that sometimes when I'll analyze a base and I see that, oh, the percent daily range, this indicator down here has been fairly low. I don't expect it to move very much. Well, if the base is properly formed, once it breaks out, it could move in a hurry. This ran 40% in the span of between August 17th to September 16th, so a month.
Mm-hmm.
Span of a month, 40% on a stock that doesn't move very much. So if you have the proper breakout, right, big change in character, something like this, it's worth paying attention to. So
I wonder what happened. I mean, change of management, change of strategy. Did they buy something? It's just that something really triggered that move, because it just carried on, and it wasn't just that month. If you look forward, if you look further on, it just continued to ramp up.
yeah, it's interesting to see what happened back then and to to do that kind of digging. But part of when I'm thinking about how I'm going to trade something, I try to think about what sort of data do I have in real time. In real time, am I going to know that, oh, there was this big change in management or something that the only way that I'm going to find out any kind of information is if the market already knows about it, right? Like even if I have something like, say, a Benzinga Pro, which is basically a retail trader's Bloomberg dashboard, where you have streaming news on all these different things. Even if I had something like that that's giving me the moment that new quote unquote news drops, am I really is that giving me that much of an edge? because there could be news happening on any given day here. Well, what's special about this? The thing that's special about this is that price actually moved and broke out. So the question that I'm asking is, do I need to know what the news is if price is breaking out? Is price breaking out with the correct kind of structure enough?
Mm-hmm.
To me, it is, but of course, we all need to ask ourselves those questions and draw our own conclusions.
Sure.
But on this breakout here, I tried to see, well, where would I place a stop? And if you use the low of that day as price is breaking out, you would have a 5.5% stop, well, which to me is pretty good, fairly tight.
Mm-hmm.
So, yeah, here's the snapshot of that one, and here's what the weekly looked like. And back then, I don't think the general market was all that hot either. Just flipping back a few pages here in the book. Yeah, the market was in a bear market. Yeah, back in '82.
Wow.
And it was just starting to come out of it. And this was one of the first ones to come out of the bear market.
Yeah, I think Mike Webster talks about it. 66 through to 82 was just a huge sideways, not going anywhere market.
Yep. So those are the cup with handles, and we're at the end of the half an hour. So
Okay.
the advice would be to do exercises like this, because it's in studying stuff like this that and doing that manual, going through your chart, annotating it, seeing what you see, even going back to historical models. Like if you've taken any of the IBD workshops or something similar, you probably have a giant book. If you haven't, there's plenty of examples in how to make money in stocks. There's plenty of examples in John Boyk's various books. My personal favorite one is Monster Stocks. That book has a lot of great examples in it. And Minervini's work as well. But to go through, find the patterns, annotate them with the notes that they have in it, and then also see what you see. And then screenshot it and save it here. Most of us are using TradingView, so they make it very easy to write notes and then take a little screenshot and put it in there. Then you have your own model book. So when you see the next time that you see something, it's like, oh, I think that's a cup with handle. You could go to your models and verify, does it look like any one of these? Or like, here's one from AMD. Right? It's slightly different. Cup with a high handle pulls back and then goes. Yeah, these are a few that I actually traded. This one has more not quite the same look, but somewhat similar to that Lowe's example with that super long base, and then you get a nice changing character over here, pulls back, and then gives you that chance as the moving average is all getting nice and tight. So, anyhow, that's it for today.
Great.
Hopefully that was helpful, and if there's any questions or anything, you know where to find me.